Namaskar, hello and welcome to Sansad TV. I am Namrata Singh and you are watching Perspective. India's economy is making new records every day. Today, India stands not only as the world's fifth largest economy, but has also achieved a significant landmark in foreign exchange reserves, ranking fourth globally after China, Japan and Switzerland. According to the Reserve Bank of India, India's forex reserves have for the first time surpassed $700 billion in the week ending September 27. This substantial reserve acts as a buffer, shielding the domestic economy from global shocks. As per estimates, India's foreign exchange reserves are now sufficient to cover over a year of projected imports. In this edition of Perspective, we will examine India's growing forex reserves and their implications for the economy. So to discuss this and much more, I'm joined by a very eminent panel of guests. Joining me in the studio is Dr.Bhavana Rai. She's an economist. Also joining us virtually is Professor Charan Singh, CEO of the EGROW Foundation. Ms. Bhavana Rai, I would like to begin with you.
Yeah.
India now ranks fourth in the foreign exchange reserves after China, Japan and Switzerland. What does this milestone mean for the country?
This is a great milestone for our country because from the last few years, we have been advocating the growth very much. And this had made a significant changes in our country domestic growth, because once the forex reserve would increase, that will help sustain the economic growth, that will reduce the import, that will increase the export promotion. Apart from that, that will enhance our sustainability capability. Apart from that, there would be an ample scope of country going aside by the domestic shocks. Whatever the domestic shocks, external shocks would be there, we are able to cover that domestic shocks.
Okay. Let me bring in Professor Singh into the discussion. Professor Singh, foreign exchange reserves are often seen as a barometer of a nation's economic health. Can you elaborate on foreign currency reserves, their functioning and their importance?
The most important thing which I would like to stress is the need for foreign exchange reserves. As just mentioned by the previous speaker, the rating agencies look at your foreign exchange reserves in a very significant manner, and important weightage is given in the country's rating. Now, please remember a country of ours when we had only 15 days of import cover in 1991, and if you take the average for the whole year, we had less than 2 months of import cover. What happened? Our ratings plummeted like anything, and then we had to really look and scourge for resources from anywhere in the world. Now, please remember, when we say that the import cover is only for 2 months, and as you mentioned, that we have attained great number there, we are able to cover 1 year of import cover. This was actually discussed after the 1991 crisis. The High-Level Committee on Balance of Payments, chaired by Dr. C. Rangarajan, former governor of the RBI, and Dr. Y.V. Reddy, who later on became the governor of the RBI, both of them had computed and said India should have at least 1 year of import cover. And that was in 1993. Now remember, 1991, we had only 2 months of import cover on an annual average. At one point of time in May, June, only 15 days of import cover. We raised it to 2002, 2003, we raised it to 1 year. By the time we raised it to 1 year, our ratings zoomed. And now the whole world knew that India has huge resources which it can weather any problem, balance of payments, anytime. We have maintained very high level of reserves for the import cover to be nearly a year. And then over the last few months, we have again brought it up. Actually, around COVID and after COVID in 22-23, we had gone down to about 10 months of import cover. And as you mentioned in your initial remarks, we have gone back 1 year of import cover. These reserves, technically, and as a soundness indicator, should at least be for 1 year. And that is what we have attained. Now, the composition of foreign exchange reserves plays a very important role. There are three major components. One is gold, One is foreign currency assets, and then one is SDR, because these are kept with the IMF. The foreign currency assets are most important and the largest chunk. They reflect our trading behavior. With which country are we trading? How much are we trading? And these foreign exchange reserves, especially the foreign currency assets, are then maintained in US dollars, pound sterling, Japanese yen, euro, because these are the international reserves currencies of the world.
Okay, Ms. Rai, so, I would like to understand from you what has driven this recent growth in forex reserves. We have also seen a decline from last month's peak. So what are the factors that contribute to either increase or decrease?
First, I would like to tell you about that the forex exchange is a component which is very dynamic. It cannot be static over a period of time. So the most important reason was RBI intervention. Due to depreciation, the RBI intervened into this, and then there was a shortfall of this. Apart from that, there was something like the import aspect was quite high. So due to this, there was a little bit depreciation and there was little decline in this special drawing rights, foreign exchange reserve, gold standard, and due to geopolitical tensions, because what we are seeing currently, there has been geopolitical tensions which is curating the oil prices. Oil shocks are there, domestic investors are not very much confident. There has been shook in the confidence level of the portfolios investors. So these are the some factors which have given a little bit strap to the what we can say, there has been decline in that foreign exchange reserve. And if we talk about why there has been again surprise rise in this particular special drawing rights or gold standard, so the confidence level of now due to geopolitical tension has been little bit deteriorated, and the people are now moving towards more globalized aspects. So there has been a little rise in this foreign exchange reserve.
Okay. Professor Singh, as Ms. Rai mentioned about the RBI interventions, so I would like to understand from you, the RBI closely monitors the foreign exchange markets and intervenes primarily to maintain stability. How do these interventions work, particularly when fluctuations occur?
So let me add and substantiate what the previous speaker has said so well. You know that the country is doing roaring as far as the growth of the country is concerned, and we are the fastest growing economy of the world. Because we are the fastest growing economy of the world, there is so much of attraction that India has, and these resources which are chasing, and I'll come to that in a minute, which are also chasing returns, portfolio investment, foreign direct investment, NRI deposits, they all come into the country. And they contribute significantly into the accretion of foreign exchange reserves. Now, the second question which you have asked directly to me, the Reserve Bank of India has always maintained, and I totally respect that stance, that RBI only intervenes when there is volatility in the foreign exchange market. So the purpose is that our exporters and importers, our traders, they have the benefit of at least knowing or visualizing what will be the exchange rate in days to come. The Reserve Bank does not target a certain rate. Reserve Bank targets the volatility. So when there is fluctuation in the exchange rate, the Reserve Bank will intervene. Now please remember, Reserve Bank is not the only country which intervenes when there is volatility in the market.
Right.
All central banks of the world that I have interacted with while I was working there at the IMF in Washington, I realized almost all countries of the world central banks intervene to contain the volatility and provided some stability. You must have noticed last few years, there was lots of hue and cry that the Indian rupee is fluctuating very widely.
Right.
No more. So the Reserve Bank is very effectively intervening in the market and stabilizing the volatility part, ensuring that the rupee is stable. Now, how does the RBI do it? RBI is very clear. strategy, I think, is a brilliant strategy that they've followed. They've been buying dollars when the rupee is strong, and that is, I think, the right strategy, because at the back of the mind, the objective is to build adequate foreign exchange reserves. Now, foreign exchange reserves are like the band-aid. Whenever there is a problem, the first thing you can do is have foreign exchange reserves. You have a huge import bill, you have enough foreign exchange reserves. Multilateral agencies can come to your aid later, but right away you have to stop the bleeding. So you apply a band-aid. Similarly, when there's an urgent need, you immediately bring in foreign exchange reserves. And this is what the Reserve Bank, because at the back of the mind has this thought, it has to have adequate foreign exchange reserves. It looks for opportunities when it can build the reserves. And what does it do? When the rupee is strong, the dollar is weak, it immediately buys. And that is how the reserves have been built so beautifully. Please, I would like to also mention one thing to you. Right now,
Right,
we have got 1 year of foreign exchange reserve import cover, but there was a time in our country when we were 17 months of import cover, solid rock country. And that is what we have maintained all these years. This is 2003-4.
Okay. But sir, I would also, since you were mentioning about the components, so for us and for our viewers, if you could, get into the specifics, what are these key components of India's forex reserves, and can you categorize them for us? For example, what role do foreign currency assets play? What is the drawing rights from the IMF?
So this foreign currency assets is the key component of any country's foreign exchange reserve. To understand very simply, if I have cash in my pocket, I can do the transactions easily. Similarly, if I'm trading with a certain country, say America or Euro area or London, England or Japan, then I should have foreign currency of those countries in my pocket. These days, because I'm dealing lots of with Russia, I may like to even have rubles in my pocket. So we keep the currency in our pocket. That's most important for us. Please also remember, the international reserve currencies are the ones which I've mentioned. US dollar is the dominant one. And so I'm sure in our reserve composition, US dollar is the most important one. Also, one more thing I would like to mention, that reserves are a cost to the economy. They are being maintained at a cost. So what does the central bank of the country do? It deploys these reserves to make them little more productive. The objective is not returns. The objective is safety and liquidity. As I mentioned, in 1991, we had a huge problem. We had only 2 weeks of import cover. Therefore, the country has learned its lesson. Many countries, especially the Asian countries, have learned from India that how important your reserves should be. Therefore, the composition of reserves is in international currencies. They are safe and then liquid. Now that we have these reserves, what do we do with them? We don't buy buildings with them and invest in those things. We actually have a pattern. The Reserve Bank of India, in consultation with the Government of India, has a pattern of investment which is very transparent, which is declared in the annual report of the Reserve Bank every year. For example, 80 to 85% of the reserves are invested in government securities of various countries. So that is very, very safe. And these securities are transparently shared where they are. Then about 10% of these reserves are invested in other central banks and Bank for International Settlement. And about 8% of these are in other commercial banks overseas. The Reserve Bank of India also tests whether the rate of return, though our priority is safety and liquidity and not maximizing returns, the Reserve Bank also keeps a certain portfolio and tests whether our returns, whatever is our distribution investment pattern, is yielding us results.
So, sir, is there a cost involved in maintaining these forex reserves?
Absolutely. There is a huge cost involved. Why we are keeping these reserves? That's why they're called reserves. For example, I can keep a Mercedes in my garage. I can use it here and there. But the cost of keeping a Mercedes in my garage is a cost. Similarly, maintaining these reserves have a benefit. While they are cost because I've immobilized them and kept them, and I'm investing them to get some return. But please remember, There are countries in the world which are oil rich or copper rich or mineral rich. They put it in SWFs, sovereign wealth funds. And they will invest in the high yielding buildings and other things, which we don't, because we are chasing safety and liquidity, because we have learned our lesson. And because we are chasing safety and liquidity, many countries in the world have followed us. Some countries have also had a sovereign wealth fund. That is okay because they get windfalls. But India does not do that experimentation. And the reason why we don't do it is because our balance of payments is in deficit, not in surplus. But oil-rich countries, copper-rich countries, metal-rich countries can invest in sovereign wealth funds.
Okay, sir. So, discussing the significance of rising forex reserve, what implications, Ms. Rai, do you think hold for the economy, and why do countries hold them?
See, country holds them because there are too many unforeseen situations. There can be COVID-like situation, or there can be external shocks, there can be financial instability, there can be emergency-like situation, war-like situations, and the kind of geopolitical tensions we are looking towards. So, for that reason, we have to reserve something which can be easily available at the time of crisis. So, this is one of the major aspect of taking foreign exchange reserve into our capacity. And gold, since one of the major component of this foreign exchange reserve is gold. So, for that reason, gold is such a huge asset. It can be used at any time, any point of time, or with any asset it can be exchanged. See the case of Sri Lanka, what happened? They have been bankrupt. Why? Because the kind of credit system they were having, it was very much impractical. If we talk about our country, we do have a very good kind of economic stability condition. So, for that reason, we can hold all these reserves, and at times when the infrastructure development, see, for that reason also, because India is a developing country. Of course, we are the fifth largest economy, and very soon we would be fourth largest economy. In the PPP purchasing power capacity, we are the third largest economy. So, for that reason, the infrastructure development is one of the huge major chunk for that reason. In that respect, we want that kind of all these currencies, and when the rupee is quite strong, so there is a need of forex reserve, because we can buy from that. And when there is the rupee, at times we have seen in the last few years, the rupee has been depreciating. At times we also depreciate those values. So, for that reason, we want this kind of special drawing rights, what we can say, the foreign exchange, gold reserves, other currencies, we want in that reserve.
So, what is the ideal amount of reserves a country should maintain? And do all countries maintain forex reserves?
Yeah, of course, all countries maintain forex reserve. Most of the countries who is generally dealing with the international affairs, they want all these kinds of special drawing rights, gold, other currencies, and forex exchange reserve. Of course, forex exchange reserve is comprised of all these components. So, every country want, because domestically domestically to have a global say in the international market, we will have to maintain.
Okay. Professor Singh, even I would like you to talk about this. What is the ideal amount of reserves the country should maintain to ensure its economic safety?
So, all countries which maintain reserves, especially emerging countries, they do it for precautionary purposes.
Okay.
In case of any crisis, they want to do a precautionary resources are available. As I gave you the example of a Band-Aid. You want to have it safe at home in case of any crisis, or a Dettol at home, so that first aid can be provided. So, for precautionary purposes. Second purpose is transaction purposes. Something which I was mentioning to you earlier, that if I trade with America or with England, I need to have pound sterling or US dollar with me. So, precautionary and transaction purposes are the most important purpose why countries maintain foreign exchange reserves. Some countries which have easy money because of oil or because of other matter, they can be also using foreign exchange reserves for speculative purposes. So they maximize the returns. India does not do that. Now the issue is, what is the adequate level of reserves? So much has been written and so much literature has been generated. The International Monetary Fund has also lots of articles on what is the adequate level of foreign exchange reserves. In our country, because we had suffered in 1991, the high-level committee, which I had mentioned to you earlier, said at least 1 year of import cover. We are an agrarian economy. It does take 1 year for the whole cycle to come back. So 1 year of import cover is the most safe, because we had burnt our fingers for a couple of years. We maintained over than 1 year. The Alan Greenspan and Guidetti rule, Alan Greenspan of Fed Reserve and Guidetti of Argentina, the finance minister, they also studied this whole thing. We did it in 93. They came out in 1999. Remember, in between, the Asian crisis had taken place, and many of the Asian tigers washed away because they did not have enough foreign exchange reserves. Alan Greenspan and Guidetti, they came out also with the rule. And their rule was very similar to that of India, which we had discovered 8-9 years earlier, that 1 year of import cover is the most ideal. The working thumb rule is at least 6 months of import cover should be maintained. But a country like ours, as I mentioned, emerging and agrarian, 1 year is considered the most appropriate yardstick in terms of adequacy of foreign exchange reserves.
So what are your thoughts on how we make best use of these forex reserves?
So India has been, I think, an ideal central bank. And that is why you must have noticed the governor of the central bank has consecutively got awards for the best central banker of the world. India has been very, very careful in case of foreign exchange reserves. As just mentioned, gold is another currency. It's not a currency like US dollar, but please also don't forget that gold, international gold standards were there till 1972 when Nixon did away with the gold standard. So gold is also a very important international currency, serves a very important purpose of liquidity. India has enhanced the share of gold in its portfolio. If you look recently, in March 2024, India had just about 8% of its portfolio in gold, and now India has about 11% of its portfolio in gold. So India is very dynamic in view of the global situation. What should be the composition of reserves? Of course, diversified into international currencies. Should we have a commodity currency? Yes, gold also we maintain.
Okay.
And because India is doing so well, India has also offered swap arrangements. Once you are so solid, strong, then you can offer swap arrangements to countries in the neighborhood. And so have we done to Bhutan. And we have also done to SAARC countries. We offer swap. So many countries come to us to augment their need for international reserves.
Right, sir. Ms. Rai, as we wrap up this discussion, any concluding thoughts you would like to share with us very quickly?
If this growth trajectory would continue, then by 2026, we would be going to be the forex exchange reserve of 745 USD. And if this trajectory will continue, then economic stability, political supremacy, diplomatic ties, we would be able to have that kind of plethora that can be the national epitome, internationally acclaimed to all the global scenario of the country. So if this continues, this trajectory will continue, then definitely we would be going to be super largest economy of the world.
Definitely, we would be going to be the super largest economy, and India's economy is thriving now, the 5th largest economy in the world and boasting the 4th largest foreign exchange reserves. It has been enlightening for us and our viewers to gain a deeper understanding of what foreign exchange reserves are and their implications and significance for the country. With that, we conclude this edition of Perspective. Thank you, Ms. Rai and Professor Singh, for joining us today. Well, viewers, that is all I have for you for now. Stay tuned and thanks for watching Sansad TV. के और भी प्रोग्राम्स देखने के लिए सब्सक्राइब करें हमारा YouTube चैनल और हाँ, इन्हें लाइक और शेयर करना ना भूलें।